Good morning, everyone. So glad that you've joined us for finding fraud, or me, it's just me, for finding fraud in revenue. I'm excited to share this with you. I have never presented this in this way, and so I kind of liked the challenge of setting up my presentations a little differently and showing some examples that I've never shown before. So I'm excited to share those with you. And it's so, thank you for the dog names comment. And yes, I am a fraud investigator through and through, and my husband is just gracious enough to let me name these dogs. Because otherwise, if it were up to him, they would all have Star Wars names, I'm sure. I love that everyone is just, we have people from all over, and this is really fun. And I see names that of people that I've met through LinkedIn over the last year, and then people that I don't know. So this is just really exciting. I know some of you were part of the last week's Finding Fraud in Payroll. And if you want to hear that one or watch that one, it's actually on our YouTube channel, Workman Forensics. So please feel free to check that one out. I had a lot of content, so I kind of went a little over. So hopefully I've pared it down today. There's just so much to share on this topic. 30 minutes is pretty fast. So since I don't know everyone, my name's Leah Wheatholter. I'm the owner of a forensic accounting fraud investigation practice in Tulsa, Oklahoma. It's Workman Forensics. And we do have a podcast. It's the Investigation Game podcast. And a couple of people who are joining us today have actually been guests on the podcast. And we just talk about all things investigation. Because if we can use logic, we can solve any problem and investigate anything. So I'm really excited about that. So we don't just talk about fraud on the podcast. Let's get started with today's presentation. All right. Okay, make sure I'm on the right screen. Here we go. So the objectives for today, and this does look like a lot. It actually looks like more than the payroll session, but I think some of these examples are pretty quick. Since not everyone joined us for the last session, I'm just going to give a brief overview of what data sleuthing is. We're also going to talk about just some like the way that I teach data analytics to my team and also in our trainings, this foundational principle or concept or just kind of the way to think about data analytics and to use that to calculate asset misappropriation fraud losses. So we'll talk about that. And then I'm going to show you some examples of cash larceny, cash and check skimming, credit card skimming, receivables skimming, and then also I couldn't decide whether to include the last one in this session or next week's session, which is finding fraud and expenses. So I decided to include it here because it is, you would find it in the revenue section. So anyway, we'll get to that one. First of all, just really high level, I want to explain what data sleuthing is. Data sleuthing is something that my team and I have actually created a process for. This is how we describe how we do forensic accounting and fraud investigations. And so we've actually trademarked the term data sleuth. And really what it is, a lot of our concepts are based on a Venn diagram. I mean, how simple, right? So I think that fraud investigations, forensic accounting, damages calculations, kind of anything in this world usually boils down to what happened versus what should have happened. And so our data sleuthing concept is also this kind of based off of or you can visualize it like a Venn diagram. We're going to take data analytics, which we're going to talk about how not scary data analytics is, but we're going to look at data analytics, and then we're going to combine that with forensic accounting and fraud investigation, which then gives us this idea of data sleuthing. So we use data to calculate fraud losses. We use data for everything. It is our foundation. So the way that we view data analytics, and we have a huge poster in our training room that actually says this, is that we're going to take what happened, what actually happened, what is the data that supports what happened. So maybe it's a list of transactions showing that an employee transferred, got a bank account at the same bank as the company and transferred funds out of the bank account and sent that to their personal bank account. That is what happened. Then we're going to compare it to what should have happened. Okay, so maybe we have to look at Okay, what are all the transfers that the company made? And then we identify the known bank accounts. So then we can see which bank accounts are unknown. Okay, so that's our comparison. So we're going to compare what happened versus what should have happened. Then when we look at the kind of the connection between these, so the things that match. So if I take my, if I take this list of transfers that this employee made, that he made for lots of people, lots of purposes, whatever, and I compare that to the list of what were approved transfers, the unapproved transfers should then fall out. And it's that part that's not matching that typically contains your loss. So today we're going to focus on the way I like to explain fraud schemes. I had an employee a long time ago that, and she worked for me for a long time, but I remember whenever she first worked for me, she said, I feel like there are so many ways that people could commit fraud. How do you know where to start looking? And so one day I was just explaining, I was like, I don't know how I would explain this. I've never had to explain this to anybody before. She was my first like real employee. And I just, as we were talking through it, she said, oh, so basically people just write checks to themselves. I was like, oh yeah, I mean, in a really generalized fashion, yeah, you're right. But then just as we started kind of talking about it more, I realized there's really only a finite number of ways or access points that somebody has to steal money out of an organization. And it's going to be when cash comes into an organization. And by cash, I mean any form of anything that increases your, increases somebody's buying power. Okay. But we're just going to call it cash. But it could be cash, checks, payroll, all of those things. But we're going to group them together. So how does cash come into your business and how does cash leave your business? Okay. So the focus of today's presentation is on how, like when cash comes into your business, into your organization, it could even be into an estate. I mean, this could be in any fraud investigation. How did cash come into the company? And what are all the ways that it comes into, and we're just going to say company from now on, even though we all understand it could be a whole host of things. We're going to talk about businesses today. So when that money comes in, there's only so many access points that somebody could steal money. And so if we can identify what those access points are, then we can actually set up things to detect, to trigger a red flag, or to prevent these things ongoing. I personally think we can't prevent all fraud. I think that fraud will happen. It's what have we set up to detect it so that we don't have these huge losses. So our cash in typically is cash, check, credit card, right? So if you, it could also be PayPal. I mean, there's lots of other payment providers, but today we're just going to focus on cash, checks, and credit cards. We're also going to talk about, so that's our revenue. That's what we are in business to, like that revenue is reflective of the sales and what we're in business to actually do. Then there's also areas of miscellaneous income. So maybe scrap income. Our example today is about rental income, maybe like subletting, because we're not in business to do that, but that's another source of income. So let's get into some examples. And I've broken these down by scheme and also by payment type. And like I said, I've worked PayPal schemes. I've worked all kinds of schemes, but we're just going to stick to the most common: cash, check, credit card. Okay, because that is what most companies do accept. All right. So first, our first example is a clothing store. We're just going to call it Clothing Store LLC. And they were a retail store, and there was a couple of people who were related who were running this store. One was the general manager and one was like kind of a clerk. And they knew that they had a problem. And I go into this more in our Be a Data Sleuth training. So if you really want to know like the juicy details of this case, join us for that. They'll start back up in May, June. But anyway, so we have this point of sale. The owner knows that there's a problem, and there were lots of problems. And so one of the first things we started looking at was, we started with, how did this company receive revenue. And they received it through cash. They accepted cash. They accepted credit cards. They accepted checks. They accepted cash through the point of sale or the cash register. They accepted checks the same way. They received credit cards the same way. But in addition, they also would go to like trade shows. And so they also had a Square account. So that gave us some areas that, okay, we're going to go look at these areas. So the one thing we want to look at is we want to take the point of sale records, how much was recorded as cash payments, and then how much of that cash actually made it to the bank. Now, I know it's not going to reconcile perfectly. They're going to leave some in the drawer. They might have used some for expenses, whatever. But still, we need to see some sort of correlation that this cash is getting deposited. Plus, the general manager was telling the owner that this was happening. So let's just look at what I've recorded a little video so I can talk over it and kind of pause and play as we go along. But what we're going to start with today, this is actually from this case. I've just cleaned it up. And what we have are, let me go back. We've got our point of sale payment export, and we're going to look at that a little closer. And then also, we at Workman Forensics, we digitize our bank statements. So the first thing that we do, we add a few fields to our exports. So let me just kind of go over this. First, columns B through H, those came from the point of sale system. We were able to export this information. I think we had to clean it up a little. If you dealt with data at all, that's not surprising. We like to add line numbers to our information so that we can sort, but then we also remember how we received the information. And then we like to add something called a year column, a year month column, and then we'll talk about this last column here in a second. All right, so we're going to add these columns that I've highlighted in green. And I've put the formulas up above, and this will post to our Facebook page and our YouTube channel. So if you want to go back and look at any of these formulas, but these formulas allow us to pull out the year from the date column, and then also just pull out the year and month in the date column. And we do this on every single, if you open up any of our Excel spreadsheets, that's what that's going to look like. Because that makes it where we can summarize on a year-month basis, and we can compare things on a monthly basis by year. It just makes it really helpful. And then, of course, that gives us a column that we can summarize by year as well. Now, before I go too much further, there are probably some of you that are saying, you could do some of these next steps using pivot tables. We do not use Excel pivot tables at Workman Forensics. It's not that we don't understand them or that we don't. They are terrible to review. And if your process is like ours, that you are preparing your work product for trial, your numbers have to be reviewed and tied, and they have to match, because there's nothing more embarrassing than being in a deposition and they don't. So not that that's happened to me, but it's happened to friends or other people on my, like kind of on our litigation team, and it's horrible and it hurts the case. And so that's why we take other steps, but because reviewing pivot tables can be very messy, especially on large sets of data. So I understand that they're awesome for auditors, and it's awesome if you want to do something quick, but whenever it comes to litigation, I find them very frustrating. So personal preference, you can argue with me later, I guess. I mean, I'm still not going to change my mind because we've had issues with them. Okay, so what we're wanting to do, we're wanting to look at how much cash made it to the bank account. Okay, and so we're going to take these point of sale records, and then we're going to summarize this information by our year month column to see how much cash was received according to the point of sale during this time period. So what this formula does is it says it returns to you the summarized amount for, let's say, July 2012, just on one line. And then you can filter that and then summarize. And this kind of took a minute. It was being really slow yesterday. So then, as you can see here, we've now summarized by year month how many cash payments we received in the point of sale. Then we're going to do essentially the same thing over on the bank statement schedule. We call these schedules. So if I reference that, that's what I'm talking about. So we call these schedules. And what we're wanting to do is identify all of the cash deposits, which yes, we had to go through and itemize those deposits so that we knew whether it was cash or checks. So same thing, year column, year month column, and then we're going to do the exact same formula, only this time we're looking for the words cash deposit. Then our next step is we're going to take that summarized information and we're going to just compare them on a monthly basis. And I know there's lag time. Once again, this is just one of our things that we're just looking for, just to see, did the cash make it to the bank? And as you can see, $95,000 did not make it to the bank in cash. So one of the things that, if you've worked with law enforcement at all, or any type of cash fraud cases, the one thing that law enforcement does not love are cash cases, because anyone could have spent that cash. Well, in this particular case, they had a civil lawsuit already, and so we were able to subpoena the attorneys were able to subpoena the bank accounts for our subjects. And so we went and we scheduled all of the subjects' bank accounts and we always just combine them into one spreadsheet for lots of different reasons, another training, but we combine all of those, and then we could look just to see, was cash deposited to this bank account, checks. We also did something called a lifestyle analysis, which we'll probably do in another training, but we did a lifestyle analysis based on data for this one as well. And what we discovered was that if this subject hadn't deposited cash, she wouldn't have even been able to pay her bills. So there was extra cash coming from somewhere. We had all her bank accounts, her payroll accounts, her husband's accounts, they were all combined. And over this period of time, she actually had deposited quite the sum of cash. So I'll show you here. We did find during this time period, so I just filtered by cash deposit and then used this formula to just sum our cash deposits, and it was $23,508. So we had that much extra cash. So that helped us in proving. Now, it's not going to tie out to our $95,000 because you can just spend cash. You don't have to deposit it, for it to be used and beneficial to you. So, but this helped law enforcement understand our case. I forgot to mention at the beginning, because I do see that we have a question. If you have a question, if you'll put it in the ask a question section, that way I can see all of them at the end and I'll address them all at once, because I do want to have time to take your questions. Okay, so one of the things related to fraud is that, and really where a fraud investigator, in my opinion, creates the most value is in looking at, for fraud, you have to have intent and you have to have benefit. And so fraud investigators are primarily looking at who benefited and how much did they benefit. So that's where tracing that, taking that to the next step to look at the subject's bank accounts and see what those deposits consisted of and finding that cash, that's where that's really important. So the other thing in this case is that there were deleted and voided point of sale transactions. And so we actually went to see and deleted or voided cash transactions. So we actually went to look to see, if we could quantify any of that to determine how much cash wasn't recorded to the point of sale. So we knew that there was a difference of $95,000 when I compare what was recorded versus what made it to the bank. But we couldn't quantify how much cash had just been skimmed. And the difference between skimming and larceny is that skimming is when it's not recorded when it's stolen. Larceny is when it's been recorded and then it's stolen afterwards. So, so the next thing we tried to look at were their inventory records, because we could have perhaps backed into the amount of cash that had been skimmed. But their inventory, since the two people controlling, there were two people and they're working together, and one of them stole the cash, one of them stole the checks. So as you can imagine, their inventory records were unreliable. And because we only include in our losses what we can prove, and what data supports, then we didn't get to include anything for the cash skimming. So even though this business was missing $95,000 of cash, they were probably missing more because there were deleted and voided items, but obviously there could be legitimate reasons for transactions to be deleted or voided. So in just being conservative and sticking to best evidence, we didn't include that in our loss. Okay, so the next type, like I said, one individual stole all the cash or a lot of the cash. One of them stole the checks. So we ran the exact same analysis, but just looking at checks. So I'll show you that example. All right, so once again, we look at our year-month transaction, and then, column, and then we just do the exact same thing where we summarize the check payment totals by month, and then we're gonna do that on our bank statement as well, and then we're gonna compare the two. So we're going to look for our check deposits, which, just so you know, if you've never looked at bank statements before or deposit items, so on your bank statement, you have copies of the checks that have cleared your account or a business's account, but your deposit or the deposit slips are just the copies of the summaries. You don't actually see the checks or a ticket for the cash that was deposited, the instruments that were deposited with that deposit. And so you have to request those. So we had to request the supporting items, we call them the deposit items, that go behind that deposit slip so that we could then itemize which checks were deposited and then how much cash was deposited. So that's how we knew that. And we actually had to do it line by line because we needed to see what customers had paid. It was just a whole thing. We're not going to get into that much today, but like I show in this video, we compared once again our check deposits in the bank to the point of sale check deposits, and we were missing about $37,000 and this is just a shorter period of time. So then, since we had this other subject's bank account, just like we had the cash subject's bank account, we could go see all the checks that were deposited to the subject's personal bank accounts. And what we found were all of these checks that were they were made payable to Clothing Store LLC, and they were deposited to the subject's personal bank account. She had not created a DBA or anything like that where, she was depositing it to Clothing Store. She was depositing it to her own personal bank account. And the question I usually get on this is, was the bank liable? And the bank did actually reimburse some of this loss. But one thing is that I think our loss was about $35,000 whenever we compared point of sale to our check deposits, but the total checks deposited to her bank account were over $50,000. So we knew that we have there both check larceny and also check skimming. We talked about that. Okay, so credit card skimming. I mentioned at the beginning that this company had credit card payments that were taken in the business. They had a retail storefront, so they were taken at the point of sale, but also they had Square, the little, you plug it into your phone and can take payments on your phone anywhere. And so through the civil lawsuit, they were able to subpoena the Square bank account records. And I'm sorry, not bank account records, the Square records. And what was so helpful about this is that Square would show us where the payments had been deposited. They had information on the deposits, and so we could see the last 4 digits of the bank account, and we could also see the routing number of the bank where the funds were deposited. So we knew that this wasn't deposited to the company's bank account. But there was a little complication. The subject's husband had an electrical business. let's just say. And so he would go to people's houses and they used Square to take payments. And so we couldn't just say that all of the deposits in her bank account or that had been used through this Square account were bad. And so we actually had to look at where did these transactions take place. And what's really nice, and it was a really nice surprise, but Square actually provides GPS coordinates for each transaction. So then we could see where was the subject actually receiving these payments. Some of them were exactly where the trade show was held. Some of them even took place, she was skimming these payments right at the store. So instead of using the point of sale, she's standing in the location of the store, taking these payments through Square. And then some were at homes. So then that way we were able to say, okay, the ones that happened at homes, we're gonna treat those as those were legitimate. But then this way we kind of uncommingled those deposits between what was expected and not expected. This is just an example of what we did. So we could look at Square deposits. We also, once again, created what, my workman forensics fields that we've already talked about. And then Square also provided GPS. And so in this case, we used a combination. All of the files came to us in Excel, but we actually used IDEA to use the feature join to then join these records together, because the deposit information came on one export and the GPS and individual sales came on another. So we used IDEA to match and join those transactions together. Then we also have just receivables skimming. This could also, I guess, be considered check skimming or any of things we've already talked about, but I wanted to just kind of highlight something that we love about QuickBooks. And I've met several fraud investigators who love the audit trail in QuickBooks. But the one thing that we don't often love is how this exports to Excel. So if you're not familiar with the QuickBooks export of the audit trail will show you if things have been modified. It even shows you when things are added by user, date, timestamp, and then it also shows when things are deleted. So this is what this report looks like. Then when you export it, it is just as helpful. And we're talking every transaction. So running an audit trail actually takes a while if you just even run it for a year. But whenever it's exported, it exports like what I'm showing on the screen, which you can't filter on this. Like, this is such a mess. So what we have done is we have actually built a macro that takes this information and turns it into a table that you can actually use and filter and search for all deleted payments or anything that was modified or anything done by a certain person. So it just makes this a usable format. We don't currently offer the macro for sale, but if you run into one that you really need done in this way, just contact us and we would be happy to convert it, use the macro and convert it for you. But what this guy was doing was he would issue the invoice, and then whenever the payment came in, he would take the payment and then he would go into QuickBooks, delete the invoice, and then he took the payment. He is somebody that, let's say the business name was Workman Forensics LLC. He went to his bank and set up a DBA under Workman Forensics and then deposited all of these checks there. And for him, he stole about $160,000. Now, the last category that I want to touch on, I've got 2 minutes. There's so much to talk about. Okay, so this last one is when revenue is used to cover fraud. And so in this case, we had something just miscellaneous income. That's how it shows up on the P&L. And it didn't match what was expected for subletting revenue. So if I charge $1,000 a month to somebody to rent this little office out and I didn't see what I expected. We're talking much larger numbers than that, but that's kind of the gist. So what we did whenever they said, hey, this just doesn't look right. We were investigating lots of other things on the expense side, but then they discovered this as well. So we asked to see the general ledger account detail just so we could see what was happening. Were deposits just not being made? Like maybe the deposit was being skimmed in one of the ways we've talked about, or was something happening like on the books? So we, I did make a video of this. All right, so we asked for the general ledger, and what I loved about the transactions was whoever was recording these, they actually left us some notes. And so some of these were just reclass expenses or whatever. But and then we see all these debits. Now, if you're not an accountant, this may not mean anything to you. So if whenever you're recording some sort of income, it is, you're going to credit this account. So the fact that we had debits in an income account was very strange. There might be some reasons, like maybe they, I don't know, maybe they just lumped their miscellaneous income and expenses together. That might have made sense. But the fact that we had so many debits was very strange. So then we want to see the other side of that transaction, because for every debit, there's also a credit, vice versa. So then we go to look at the credit side, and we find that there are business expenses, business promotion, advertising, entertainment, and meals that were essentially being reclassified against this miscellaneous income. So we then went to the bank statements, because I will pause one more time here. Anytime we have something in an accounting system, accounting systems are managed by people, and often by the people that we're investigating. So we can see that there's an issue, we see that this is weird, but these journal entries don't cash at the bank. That's one of my favorite things to say. So we have to go find the corresponding bank statement. Where was cash actually spent, so that we can see, okay, what's kind of the meat behind this? Is this just an accounting thing, or was actual cash stolen? And what we discovered whenever we compared these transactions to the bank statement was that this individual was making a lot of donations to his kid's school. He gave $10,000 to a personal friend. He hosted a golf tournament that was not company related for his friends. There was a plastic surgery payment. I mean, it was all kinds of stuff, and they were hiding it in the miscellaneous income so that business promotions, advertising, entertainment, and meals wouldn't be overstated and a red flag to the business owners. So that is my content today. We are at time, but I am happy to answer questions if you'd like to stay on for those. Like I said, this will be on our YouTube channel, and also our YouTube channel. So if you want to see any of those examples again, I'm very happy that all of you joined today, and I will answer these questions. Okay, so one of the questions, and Ryan, you're from Long Island. Okay. Do you ever have problems with privacy laws when you're investigating, like banking privacy laws? We do not, because we work with attorneys or law enforcement. So when law enforcement receives the bank statements, we often are not involved in that part of the process unless we're contracted by law enforcement. We don't go get subject information without working with an attorney, and that attorney subpoenas the information through a civil lawsuit. So we do not use, I know that they're out there, but we do not use any databases that obtain financial information, because those are inadmissible. So we only go get that information from the banks. Now, if our clients, like the business, they are our clients, then they usually just provide that information to us, and the contract that they've signed with us and our internal policies, we maintain confidentiality. Let's see. Has there ever been a time that you were able to reasonably accurately quantify cash that was skimmed? Whew, I got to think about that one. I'm trying to think. I feel like there is, but I feel like it was really, really old. A very old case. I may have to come back to that one. I'm sorry, Richard. I can't think of one in the moment. Let's see. What tool do you all use to digitize bank statements? I know there are outside services that do that for most bank statement formats. Our favorite is MoneyThumb, and I will make sure to put that in the follow-up email to this webinar. I really like them. I hand entered this when I worked for the FBI. And then anyway, I've kind of just grown up with these software, and now I have someone on my team that is amazing at data processing. And we just got the pro version of MoneyThumb, and it was fantastic, or is fantastic. Let's see. Does the bank charge for pulling deposit items for investigations? Yes, it's part of the banks that we've worked with, they usually charge an hourly rate to pull those, and I think it's about $20 an hour. I mean, it still could be several $100s, but usually when they're doing that, we're talking about a pretty big case anyway, and they just charge the client's account for doing that. All right. Richard, it's still bothering me that I can't think of a case. If I think of it, I'm going to put it in the follow-up email. All right. Thank you all so much for your great questions. Have a wonderful weekend. And next week, we'll do this again on finding revenue and expenses. Thank you.